So, good day, everyone. Welcome to my channel where we bring accounting or account closer to you. So, today we want to discuss about accounting equation, right? Accounting equations. Uh, this is one of the important topic that we should know. It is the basic of accounting, whereby if you understand this particular equation, you'll be able to you will have the basic or the fundamental knowledge of accounting. Accounting will not be hard to you anymore. Accounting will be somehow easy if you truly understand this. Now, for us to understand it, we have the equation is asset assets equal to, right, equity plus liability liability. Let's say asset is equal to equity plus liability. So this is as simple as this. This is the accounting equation we are talking about. The asset equal to equity plus liability. One thing that you should know first is to be able to understand this asset. For us to know our asset, that means we have to add equity plus liability together for us to know the value of our asset, right? So before we could, let's see this as for example, as you want to buy a car now. Let's say your name is Ade want to buy a car of 5 million naira, of 5 million naira. And he has, let's say, 2 million naira, like this. 2 million naira, and borrowed 3 million naira from Ola from Ola. Let's use this as our naira, or let's use this this dollar. Let's use dollar, right? So now let's calculate our asset. Let's use this accounting equation to calculate the total asset. Now, right now, we don't know our assets, right? And our equity. Equity means the money that you have, the money that you yourself you have at hand at that particular period of time. So ID has how much? 2 million naira. So we are going to say 2 million naira plus liability means the amount that you borrowed. It means the amount that you borrowed from someone. So Ade borrowed $3 million from Ola. Let's say from Ola. Yeah, right. So in total, our asset is equal to how much? 5 million naira. So that is how the accounting equation works, and therefore we have five. We have hold on. We have 5 million naira equal to equity is 2 million, equal to, let this like this, equal to 2 million naira plus 3 million naira. That is it. That is our accounting equation. And there will be some situation whereby you'll be given an asset and you'll be told to calculate your liability or your equity. And for the secondary school student, We can also your asset, your equity can be called capital. Sorry, your equity might be called capital. Might be called capital. We say asset equal to capital, capital, capital plus liability, liability. Yeah, capital in a layman definition means the amount of money you use to start a business. For this now, they want to buy a car. He has 2 million naira. This 2 million naira means is a capital, while the amount of money he borrowed is a liability. And we can also change this like this. We can say capital equal to liability, liability minus asset, minus asset. That means whenever you say liability minus asset, or asset, or capital, capital equal to asset minus liability, liability is still equal to capital. Do you understand what I'm saying? That means we can interchange this and say that our asset, we can interchange it and say that our asset can be interchanged. Asset minus liability will give us capital. That means for us to know the amount of money we use to start a business, we have to subtract the amount of money that we own, the asset that we own, the money that we own minus the money that we borrow. For example, session, right, has build session built a building, build a building at 10 million naira, build a building at $10 million, $10 million, $10 million, and borrowed and borrowed and borrowed how much? Let's say and borrowed 3 million, 3 million to complete the building, the building. Calculate the capital of session. Now, this now, if you check, don't let us forget, we say our asset, that's your formula, that's your equation, equal to capital or equity plus liability, right? So we have been given an asset, right? The building, built a building at 10 million naira. This building that he built is known as our asset. So we have 10 million naira equal to the capital. We are not given capital, right? But we are given what? We are given borrowings. He borrowed 3 million naira, which is our liability. You can say he borrowed 2 million, 3 million naira, $2 million, 3 million. Now, to calculate our capital, capital will be equal to capital equal to $10 million, minus liability, which is minus 3 million dollars, which will give us what? It give us $7 million. That means our capital is equal to our capital our capital is equal to $7 million. So that is that about accounting equation. And this also, we can actually calculate our liability too. To calculate our liability, we can say liability is equal to assets minus capital or minus equity. So you will get your liability. And if you check the financial statement properly, you see that this is what the accounting, the balance sheet, which is the financial position, followed. You will see that once you add your capital and the ability together, it will give you your total asset. But once you add your capital, your equity plus liability, it will give you your total asset. Once you subtract your liability from equity, it will still give you your assets. So that is why we have different phases in our financial position. Sometimes assets and liability will be will be added together, and the equity side will be alone. So the total will be equal. The two side must be equal. So for us to understand this side must be equal to this side. That means if you add your capital and liability together, they must be what? They must be equal. So before we go for today, we have to explain the the basic words here. Here we have asset. What is asset? So we can say the asset are properties properties owned by the company by a company, yeah, by a company or an entity, by a company or an entity. This is a layman. Anything you own by yourself is known as asset. If you have a building, it is an asset. If you have a cash at home, it is an asset. If you have a car, it's an asset. Everything that you own is an asset to you, right? But according to IFRS, uh, they have IFRS is an accounting standard that guides the preparation of accounting. So IFRS gives its own definition of an asset. He said asset is an economic resources resources, right? Is an economic resources uh, as a result that flow as an economic resources of an entity sorry of an entity as a result of past events as a result of past events. An asset is an economic resources of an entity as a result of past events. This is a definition of an asset according to IFRS. This is the definition of an asset according to IFRS. So, an economic resources, what do you mean by economic resources? Is the resources you have. Resources you have. It can be cash, it can be building, any resources that you have. Economic resources. The resources that have value. The resources that have value that can be measured, they are all assets. But if you are the one that owns them, if they are owned by you, you call them an asset. As a result of past events, as a result of what has happened, you have acquired it before, you bought it before, or you lease it out, or you rent it. Yeah, something that has happened before. So that is why it is like that. That's why we have that's why IFRS gave us this definition that an asset is an economic resources of an entity. It is owned by an entity. Or we can say uh, asset is an economic resources of an that is controlled, or we can also say that is controlled by an entity. Is an You can also say asset is an economic resources that is controlled by an entity as a result of past events. Yes, the entity must be controlling the asset. The entity must be in charge of that asset. The entity must be the one that owns that asset before we can classify it as an asset. So we have a liability, right? Liability. Liability is what you own, what you owe someone. If you borrow money, if you borrow money, it is a liability. Liability is what an entity or company owes or owed, whatever they hold. If they owe you a certain amount of money, that amount to the company is a liability. If they borrow money from you, is a liability. The money borrowed is a liability. But if you are talking about according to IFRS, we can say that a liability is a present obligation obligation is a present obligation of an entity to transfer to transfer to transfer to an entity as a result of past events. And sorry, these two, an asset is a present economic resources. Yes, is a present economic resources as a result of an entity, as a result of is a present economic resources that is controlled present economic resources that is controlled by an entity. So liability is a present obligation to transfer to an entity as a result of to transfer you can say to transfer control to an entity as a result of past events. You borrow money from someone, present obligation, what you're supposed to settle now, what you have to settle now is what's known as present obligation. You borrow money from someone, it's a present obligation. You have to pay the person now, or you borrow it now, so it's a present obligation. Now, lastly, we have equity, or we can say capital, for our O-level students. Capital or equity. This this is what is left for you. What is left? What is left for the company? For the company. What is left for the company after deduction of your liabilities and assets? Now, according to IFRS says that okay, equity is a residual interest. Is a residual interest. Equity is a residual interest, right, of an entity. of an entity after deduction of liabilities on the assets So what this means, residual interest means what is left for you, what is your own, what is left for you. So what is left for you after deduction of your asset and liability is known as your equity. So try to is there if you have any other question, you can send a message to the chat box, and I will reply you, or you should be able to send any question that you have to the chat or to the comment section, so that we'll be able to attend to you. If there is anyone you don't understand, you can just use that comment section again to reach us, so that we can look at it together and make sure that we understand this basic accounting equation. So with this, we should be able to distinguish between the asset and liability, also equity or capital. And we should not forget that the two sides must be equal. The side of equity and liability must be equal to the side of the asset. And that is what we call balance sheet, trading a statement of financial position. Thank you.